Hey everybody, welcome back to Wall Street Beats Roundtable. I'm your host for this session. I'm Paul Meeks, one of our tech voices. And today our esteemed panel includes Nadine Turman, Ben Bry, Russell Young, Bob Morris, Robert Marson, and Stephen Lamar. So we have a lot of interesting things to talk about today. Some individual stock trades, long and short, some option trades, individual securities and indexes or ETFs. So without further ado, let's just get right at it. And Ben Bry, tell us what you have today.
Yeah, I thought it would be interesting since it's NVIDIA Day and we have, the one of the probably more anticipated prints of in a while. And I thought that you could just sell some one-day SPY puts that expire today and buy tomorrow's SPY puts, 560 at the money, could be 561. Do you take in about, or it costs you about 50 cents? Let's just say, I know you and Russell love NVIDIA, but let's just say that their numbers aren't quite good enough, right? So it doesn't have to be bad numbers. It just has to be not quite good enough. And then with the SMCI not getting their filing out, and then the GOAT of short sellers putting their short selling report on that, there's, things that could make people a little jittery. And so this is just a way that if the NVIDIA doesn't come through for people tomorrow, market could be down 1 to 3%, and you make 10 to 20 times your money with this. A short-term trade, but also a way to hedge your book on something that you're not going to want to buy NVIDIA puts at 72 vol. It's just an easier way to put a little hedge on if you don't have an opinion on NVIDIA or if you want to speculate. Either way.
Well, the way I look at it is you're spot on because I cover NVIDIA pretty carefully, and I'm a little bit anxious about what they say this afternoon, and then followed by Dell tomorrow, what they say about AI, data servers. So we'll see, but I like the idea.
Ben, walk us through the downside if they hit the cover off the ball.
You lose 50 cents.
That's what I thought. I just wanted to make sure I had that right.
you lose. So you buy them for 50 cents, and then you lose 50 cents. If they're down the bunch, you make $5 to $10. Well, that's kind of how it works.
Sounds like a Ben Bry special.
Ben Bry special. Only Ben Bry can do that. All right, let's move on next to Dr. Robert Marson, who, if you see the video, is wearing the Technicolor shirt. I got to wear shades, dude, when I look at you on my camera. So anyway, what have you today, sir?
Well, I have a really bad idea, but you never know. Sometimes bad ideas work. I'm a deep value guy. I don't mind buying stocks down. I don't mind buying them down a lot. I don't mind buying them cheap. So the gist of buying these kinds of bad stocks is that you have to have a really good fundamental reason for thinking everyone else is wrong. So I opened up a file on Walgreens Boots Alliance. It's been such a disaster. Even Kramer spent 10 minutes talking about it this morning on CNBC. The stock, probably peaked at around 100 10 years ago. It was $40 last year, 2 years ago, and is now 9 and change. At that price, the valuation is about $8 billion of market cap on $140 billion, $150 billion run rate in sales. And there's about $8 billion in net debt. Now there's $22 billion in leases. So that's a liability that I wrestle with how to value it in an enterprise value. For a viable ongoing business, it's just 20 years of operating expense in my mind, not real, non-financial debt. I'm trying to work on the business and get comfortable that there's not an existential threat to the company, and I haven't yet convinced myself that that's the case. Their big move lately in the last few years, in addition to, they made a big move a decade ago buying Boots Alliance in Europe for way too much money, which is what CEOs generally do when they invest with other people's money, while making strategic acquisitions. You want to run far away when you hear a company's doing a strategic. It just means they're using that phrase to grossly overpay for a business. So these guys did that to diversify that business is actually doing very well right now. Might end up keeping them afloat. The core business, is the retail drugstore business. They have 9,000 locations in the U.S. That business has been under competitive pressure from Amazon. All the food stores, the hell, Walmart's gotten really big in that business and is doing a good job. I think I read somewhere. So it's not, the retail drugstore might be the dodo bird. We don't know. In response to this, they tried to turn it into a doctor's office or a healthcare clinic. And they bought Village MD, and that hasn't worked so well. They grew it rapidly, only to realize it wasn't generating the returns they needed, the traffic they needed. And now they're trying to figure out what to do with that too. So I'm trying to figure out if there's life after Amazon and Walmart here with this business and COVID. Everybody benefited from COVID in this business. But now that that's gone by the wayside, it appears that, for both them and CVS, life has gotten a lot tougher. If they succeed, the company has made $5 in earnings, $4 to $5 in earnings for a bunch of years in the last 7 years. A stock, who's to say nine's the bottom? Tax loss selling, institutional window undressing selling, I call it, at September year end, which is the fiscal year for many mutual funds, could drive this stock to 8 or 7 or 6. So I'm leaving open the idea that they won't go bankrupt in the next 6 months. And if it gets really crazy on the panic selling side, materially below 9, I might put on a trade in the next month or two. So that's where I stand. Taking a look at it, not convinced, but not unwilling to trade it if it gets overdone from here.
Well, I saw, Robert, that just in the last 90 days, the year-out earnings estimate goes from about $3 to $2, and maybe that's the bottom. But I just wondered the next time they report, which I think is probably mid to late October, that we don't have another, lowering of the EPS estimate.
Management's going to give a whole new game plan, financial target for the estimates for the next year. But the last quarterly call, they mentioned that 25% of their 9,000 stores in the U.S. were not earning an adequate return and would have to be, rethought. They have 13,500 globally, so there's another 4,500 abroad. They haven't said anything about them, and they said the pressures that caused us to miss this quarter will be prevalent into 2025. So that was the reason. So Street is sort of guessing that it's a $2 run rate. The point is, that's only less than 1% net profit margin, I believe. The point isn't whether they make $2 or $3. If they make either, the stock goes up a lot. The question is, do they make $0 or negative $2? Because that's what the stock is saying.
Yeah. Well, thank you very much. Now, Nadine, you had some thoughts based on some short-term technical analysis here.
Right. So this is super short term. I'll leave the fundamentals for Robert to come back to everybody on. Maybe they'll go into being data centers driven by AI themes. But the trading range, so some of the charts that I put in were from yesterday's close, but I'll talk updated numbers here because I've got it on my screen. But I would be careful for using this or anything but a super short-term trade. You've got, bearish short-term and intermediate-term momentum signals going on, which means the trend's not your friend if you're trying to go long. So you could get more confidence owning this if at least the short-term signal would change to a neutral. It is flagging buy today. It still is. And you've got a low end range of 9.47. So that's an updated figure to selling above 10.89. And so I think Robert's right to be looking at this, right? Because what you have here is a very, very high odds. We're talking 14.5 to 1 on yesterday's close. And then I'll give you here. It's at 15.09 to 1 odds, making money on a short-term trade if anything positive happens. So I like that, right? I like that asymmetry that if anything goes right. But to really hold this stock, you need the momentum signals to be going in your direction, at least neutral, changing into a short-term neutral. I don't think you're going to get an intermediate term for quite a while. But I would definitely be looking at the trading range to trade this and coupling that with any kind of fundamental things that you could think of, because again, you need something good to happen for this thing to be moving big. But on a short-term basis, people are just throwing this out. I think Robert's right. People are just not puking the stock, but they just hate it, right? Like any reason to to tax loss harvest or, put money into other places, people are probably cleaning up this stock right now.
Well, one of the things excites me about the team, right? You have a combination of a top fundamental analyst, and I know, Nadine, you do fundamental work too, but, give me your thoughts today on the technical side of the house.
Yeah,
It's cool.
you got to marry them. You got to marry them, Paul, and especially in a name like this where everything's been bad. You hope that you come up with some fundamental thesis of what could go right.
Well, thank you very much. Let's move on to Bob Morris. Do you have something to say today about Canadian National?
Yes, thanks, Paul. So, as you know, C&Q's my favorite energy name or E&P name here in the group. I'm overweight the stock, but just given the recent uptick in oil prices and uptick in volatility given events in the Middle East, I was looking to write November $40 covered calls on a quarter of my position here. And this is something I do from time to time on some of the stocks in the portfolio just to take advantage of the volatility and looking at the technicals at the same time. And so, just taking in a little bit of extra premium. And if I look at this, the November 40 calls yesterday were bid ask 65 cents, 75 cents. They're down about a nickel today. But if you take it at the midpoint at 70 cents, that's about 2% on the stock price currently over a 2.5 month period. To the right, out of the money covered call with a strike 8%, 9% above where the stock's trading currently. And given the technicals, I think is a nice way to take in a little extra premium there. Technically, I think the resistance initially is at $39 a share, and then secondarily at $41 a share. The all-time high is $41.16 that was hit early April of this year. But, the upside risk is that geopolitical tensions really escalate sharply in the Middle East, and oil prices spike and all the energy stocks run up with it. But otherwise, in 2.5 months, as we approach expiration on the November call, I would look to roll these if we're at 40 or higher. And the thing that people often don't recognize is that even if the stock is at, say, $41, $42 a share, you can still take in extra premium rolling the $40 strike calls, or you can roll them up to 42 and still take in some premium, just raising the strike price, rolling them out another 2 to 3 months. So the only way this really doesn't work is if the stock spikes to say $50 a share and you just have to let it get called away because it runs that high. But, just looking at the volatility and technical factors, this is something I like to do. If I can look out 2.5 months, take in a little extra 2% premium at a strike price that's technically at the highest resistance level I see on the charts, it's a good idea. It's something we do from time to time. And I think Nadine may have some comments on the technical side of it too.
Go ahead. Sorry.
Before we pass it on to Nadine for the technical analysis again, what's your ultimate price target on the common stock?
This is something I've been looking at 38.40 by year end. So it's at my price target, running the strike at my price target. Again, you can always roll these if we get to that level and just sort of see where we go from there. But just taking in 2%, if the stock runs to that strike price or above, totally, you're taking in 10% plus in 2.5 months if it runs up to that level. If it doesn't, you take.
Yeah, I think it was interesting because Bob's like, hey, what does the technicals say? So we didn't coordinate ahead of time, but the technicals support what he's saying. You'd be right to write that call option. And, there's a chart that's going to come out. That is yesterday's close figures. So I'll give you some updated numbers. But yesterday, the risk range was 35.25 to 37.63. Today, we're at 35.50 to 37.83. So similar. So you're really looking at not that much upside. So call it 2.45% up to, if you're looking down, minus 3.87. So odds minus 1.6 to 1. So that's not odds that you're really going to love if you're holding that. So it would be right to sell that call option. It does have a short-term bullish momentum indicator, but a bearish medium-term one. So you really have to be careful thinking about this range set. I would be watching that short-term signal. It's obviously a hold because the last price was 36.52. So it's sitting in the middle of that range. So that's a great time to be selling a call option if you think, gosh, it could get to that high end of the trading range, maybe, but it also could have a much greater downside than the upside. Also, the implied volatility signal is neutral. So again, the stock could pull back either way. Folks are pretty neutral in the options market. So I think Bob's right here. He can collect some premium and sit. That was his price target anyway. That's the technicals anyway. And then watch to see, what is he's got a little bit of time to then figure out what's his next play.
Before I move on, any comments from the rest of the panel on this play and the technical analysis for CNQ? All right.
Is there much vol premium? Is there much vol premium in this priced in? I mean, it looks kind of middle of the road.
Yeah, just middle of the road. Yeah, that's why you've got is neutral, right? And then the short interest signal is pretty low. So there's just not a lot being played right now.
Yeah.
All right. Well, thank you. We're going to finish up with Russell Young. And Russell, whether it's at the beginning of your presentation, the middle, or the end, I expect a super micro Meeks beatdown. So let's get at it.
Yeah, no, I mean, as you know, I freaked out on when Supermicro reported their quarter because the margins fell apart and then they weren't going to conferences. I mean, they were having one-on-one at important conferences. And I'm like, this is not right. You guys just massively disappointed. And so I was out at that moment and was decidedly negative. Hindenburg comes out with the research report, and I thought the main point was margin pressure, right? I mean, Foxconn is coming in doing this business. And they raised questions about the audit, but these issues were in the past. But then today they say that they can't get their K filed for a company just added to the S&P. This is ridiculous. So can you bottom fish in this? I don't think you can. I think if you did the numbers and you said, they're going to do 50 billion revenues at a 3% margin, which is what Foxconn is doing, you're looking at something a $200 stock possibly to a $375 stock. So it's I think the pressure is still on this stock until we could retrace this entire move. And we don't have the numbers. And so if they don't get it filed in time, that's a big problem. 0 to 0 very fast.
So you're shorting it?
I shorted a little bit after the call, and I shorted some this morning in the pre-market.
Okay, there you go.
But we'll see. It's like, but I don't think you can really cover it. That's the highest I think a bottom fisher could pay right now would be 375. So big change there, right? But it was that tell when they wouldn't do the conferences that set me off.
Earnings level. And what's your best guess at earnings for next year with the new unimproved 3% operating margin, if that's what they're shooting for?
Well, that's what I was saying. It's like their earnings could fall to like $20 if there's this much pressure. Right. It's $20 to $30. It can be such a huge wide range on earnings. But if they have to match Foxconn and take a 3% operating margin, I mean that's $1.5 billion on 60 million shares, right? So the margin pressure can be extreme here. So then, talking about Walgreens, I don't know if you guys, how many of you are in California, but you try to go shop at one of these stores. It's like you can't shop them. Everything's right behind plexiglass. It's the most miserable shopping experience. And Amazon will deliver everything the next day to you. So it's like, maybe you can go in there for prescriptions, but it's the whole retail experience in California is dead. And I don't see how they ever recover that from Amazon. But everything looks cheap, but like go shop the stores and it's a disaster. I used to like going to them, but it's impossible. So what I want to talk about, we talked about SentinelOne before the earnings, and they put up a good quarter, 33% revenue growth. They said the second half is getting better. Obviously, it's going to be in comparison to CrowdStrike tonight, but I still like this stock, and I feel like you can get like we're getting a steady 20% growth out of this. I think after a CrowdStrike, smaller enterprises and people are looking to spread out the risk of these security vendors. So I think CrowdStrike's going to hold on to its customers, but I think more and more people are going to be looking to SentinelOne. So I still like that. Chewy, 2.6% top line growth. I don't think it's that inspiring. And I think they're facing Amazon, which is going to be continuing to get better and better at their execution and paid placements. Chewy looks okay, but nothing inspirational there. And then a quick comment on HIMSS. Lemonade is going to be doing compounded semaglutide. I think all these companies plan to do this before Eli Lilly told us that they're going to sell their GLP-1 in vials. And so everyone is trying to do this, and they're going to do it with actual real doctor consultations versus what HIMSS is doing. So just more pressure on HIMSS. But what I wanted to really talk about is Okta. They report tonight. And I feel like this is one of the top security vendors that everyone has kind of left for dead. And they had their big Octane conference back in January, and they released 2 new security products, their PAM and their IGA products. And so they've been doing a ton of trials, getting people to look at the products. And so I think they have a really good chance of putting up a great quarter tonight and surprising the street. People don't want to talk about it, and everyone wants to focus on the security breach they had. That really wasn't that bad of a breach. Like some IT got released. So I'm excited about Okta tonight, and I think people need to pay attention to this company because I think they've turned this around, and I think it's super interesting.
So Russell, what do you think about CrowdStrike in here?
I think CrowdStrike's going to hold its customers, and I think they're going to announce that they're discounting on renewals. So I think they're going to be talking a lot about that. I think they put up a strong quarter. The security breach happened with 1 week left in their quarter on a light quarter. And I think they're going to hold people, but I think there's going to be a lot of discounting. So it's going to be questions of how they're going to talk about their outlook. But they're doing everything they can to hold their customers. People still like it. They're so big, they're not going away. I think it's just going to be a bumpy period here as customers are going to be asking for discounts to renew, and they're going to get them.
What about the legal liability from folks like Delta Airlines, et cetera?
I mean, that's going to be really hard. Microsoft came out and said it was because Delta's IT system sucked, and it was their problem. So it's going to be an overhang, but I don't think that's not most companies, but it'll be a slight overhang. But I think CrowdStrike's still the best company. People don't want to get off of it, and companies recover from it. So I think it's just a bumpy transition period.
Hey, Ben, did you have a thought?
Yeah, I not a thought on that, but I just would like maybe you or Russell to just lay out NVIDIA for tonight. What does a good scenario look like? What does a bad scenario look like? And since both of you guys cover it and you're pretty deep in the weeds, I think just for our listeners, since it's such a big stock and it's an important thing, maybe just lay that out. And for me as well, please.
I think it's totally ridiculous that everyone's like, oh my God, the world hangs on what NVIDIA says tonight. It's totally ridiculous because they kind of have this market to themselves, and the checks are still very strong. I expect they're going to meet they're going to come out, they're going to meet their quarter, they'll probably raise again. You talk to people about H100s, and the GB delay is not impacting anyone. If anything, it's caused people still can't get the H100s they want. So I think of all this anticipation, this is a huge deal. I think it's going to be a typical NVIDIA quarter, and so. I think everyone is so focused on this. And if anything, to me, it says there's other probably better opportunities elsewhere in the market because people are so hyper-focused on this. And I don't think it matters anything to the market, right? If NVIDIA missed, Meta might go up because people say that Meta has better capital discipline right now. It's however the it of the market wants to view it. But I don't think it's going to be a big event like everyone thinks. If anything, I would sell the volatility on the stock, but I don't do that stuff.
Yeah, I believe the same view. I'm a little bit more cautious than Russell seems on the quarterly report, just because I think everything has to go right. But the bottom line is the hyperscalers who are doing the spending have all reported their results. They've all confirmed their AI-oriented CapEx, and they say that it's going up next year from 24. And as long as those guys have the financial wherewithal, and of course they absolutely do, we have never a demand issue. Is there a manufacturing glitch? Is there not? I don't think it matters. I'm not buying the stock ahead of the quarter, but if there was some glitch or conversation about that today, and it does hit the stock, then I buy it. But it's too close to a potential big earnings announcement that I just can't do anything with it until after I've cleared the air and heard what they have to say. But then I'd be prepared to buy it with both hands.
Yeah, I think Taiwan Semi is much more interesting here. They're a big beneficiary of it. And as a lot of other semiconductor companies say this is the bottom, like Umbrella had good comments about saying their channel is finally cleared up. Taiwan Semi is doing great with NVIDIA, and I think it's a lower multiple, and people are so focused on NVIDIA, I think they're missing what a great business Taiwan Semi is.
Well, guys, we're at the end of our time allotment. We heard a lot today. Pretty psyched to have you guys on the show as always. I'm Paul Meeks saying goodbye to everybody here at Wall Street Beach, and we'll see you tomorrow.